Hey, what's up, guys? So I'm excited because we're going to talk about Bollinger Bands and how to couple that with market structure for the best entry and so that we can identify some good trades and make some good profits. So really quick, we're going to discuss Bollinger Bands. What are they? So Bollinger Bands on a chart represents a volatility range, and it does nothing but consist of three bands drawn in relations to price. Now, the middle band is the 20 simple moving average. So we have that kind of in a light white color here. And it's surrounded by two bands. So there's an upper band and there's a lower band. All right, I have the red one at the top and the green one at the bottom. Now, these are nothing but lower standard deviation bands, which establish a possible support and resistance level. So this is also known as a volatility channel here. All right, so Bollinger Bands measures and provides information such as trend continuations or reversals, periods of consolidation, large volatility breakouts, as well as potential price targets as well. All right, so let's go ahead and get a little bit further into this here. All right, so what I have here is, so from a technical point of view, the outer bands provides an element of confidence. So the red here, the upper band represents resistance while the lower band represents support levels. Now, unfortunately, these bands alone does not provide relevant buy or sell signals, which is why it's smart to couple it with something else such as market structure. All right. So in theory, the top band, once price or the candle pokes through the top band, it's like, hey, you know what? This price is overbought. Now it's time to sell. So we're going to sell. So as you look at all of these here, every time it hits the top band, it goes down, comes up, goes down. Every time it hits the top band, it goes down. Every time it hits the bottom band, it goes up. So it is a channel of volatility, which kind of gives the trader an okay to buy or to sell. Now, that's not always the case because as you can see in this area here, we have the Bollinger Band poking through the top. However, it has not gone down yet. So that's why we want to couple with market structure as well. Okay, so let's take a look here at this angle here. So we can obviously see in this area here that price is poking through this green band, which signals to the trader that it's possible time to buy. Price is pretty cheap, is bringing buyers into the market. It's going to go up. Okay, now how far up is it going to go? Because we know that once price hits the Bollinger Band, there's a good possibility it may go the other way. So here's market structure here, okay? I'm going to grab a trend line, and I want to get from the bottom of that candle, I'm going to run it through the second candle here and kind of take that up here. All right. Now we typically make this candle, these candles chart into a line chart. We want to make sure we get to the bottom of the line chart, run it through to the second one and up higher, and then we take it back to a candles chart. All right. So now we have two confirmations. We have the Bollinger Bands, which gives us price action, and then we also have the trend. We mark the trend. We want to see if price is headed in a trend, if it's just going up, if it's going down, if it's going sideways. So now we have two things on our side here. Okay, so we can see that here bottom, the price was here at the bottom at the green Bollinger Band. It poked through to the red. Okay, which gives some buyers, which gives some traders a signal to sell. But you know what? We did not see it go back down to the green Bollinger Band. It kind of hit the middle 20 average band here in the middle, and it kind of continued to go up. And then it went down, and then went up and down and up. Now we have this trend line that we can follow to understand how far down it may go once it hits the top of the band and how far up it's going to go once it hits the bottom of the band. And so that's why we couple both of these to kind of make a good determination of how far it's going to go. All right. So now we see that price is up here, is at the top. So Traders, would you buy or would you sell? Now, I definitely would not buy. I would like to see how far up is it going to go before it goes down. And then when it goes down, how far down is it going to go? Okay. So let me grab an arrow here. Now, could price come down to here, to the trend line? Now we have a trend line and we notice that price has respected this trend line. It did not pass that trend line. So the odds of price coming down and hitting this trend line or maybe barely touching the trend line is very, very good. Now, another thing we like to do is look in the past to see maybe how high this trend line will be going, or how high price will be going. So sometimes I like to do is go to the weekly chart to get a broader view here. And I like to look left for clues. Okay, so price is currently here. Now, how much further is it going to go? Now, let me go ahead and draw a line here, a horizontal line where price is currently at. Okay, this is white line here. Let me go ahead and delete these other lines here so you don't get confused. Now, we have this white line here where price is currently at. Let's look left to see if price can possibly continue to go or not. We notice that price has gone above this white line in the past. Above. So odds are price may continue to go up as well. Okay. Now I drew this red line here to show you that where price respected previously here. So if price ever goes here, I can draw a trend line up to this red line and say, hey, you know what? I think price is going to go here. I think price is going to continue to go up until it hits this resistance level here before it reverses to a downtrend. So you notice how we use market structure, meaning we look left for clues, we're drawing our trend line, we're understanding support and resistance mixed in with the Bollinger Band. Now for Bollinger Bands, you want to be careful how you set this up. All right. So as far as Bollinger Bands, you can see here that I have the standard deviation is 2. And that is a good number that we meaning Kenya and I have decided to use because it allows us to know how far up these candles will poke through these Bollinger Bands. So let's go ahead and change it up to 3 and look at the Bollinger Bands and how it shifts. Okay, so you can see that the Bollinger Bands, most of them have not poked through. So this will give you a higher probability of trades. You may trade less, but when candles poke through or touch the top of the band, it will give you a higher probability that price will start to go down. Same in reverse. If price were to hit the bottom, you know that it will begin to go up. All right. Now, let me go ahead and turn my standard deviation to 1, and you notice how the candles are way out of the Bollinger Bands or way below the Bollinger Bands. So you know that once it touches the Bollinger Bands, you don't know whether to buy or not. That's a little risky. So you may take more trades and your trade confidence is not there. Whereas if the higher you go, the more confident you are. Okay. So if I even do it to a 3, let me go back to standard deviation of 3, you can see that candles are touching the band and then it starts to respect it and go back down. All right. So 3 and 2 seems like a perfect number for your standard deviation for Bollinger Bands. So market structure, using your trend lines, also looking in the past to see where price has gone, where price is respected, your support and resistance, along with your Bollinger Bands is a great strategy to use. And it doesn't matter if you're using the daily, the 4-hour, or the 1 hour. This just depends if you're a swing trader, if you like to get in and out as a scalper. But ultimately, when you're using market structure, you want to use at least a daily because that is where you're going to use your trend line. Your trend line, you want to zoom out and look at daily candles or higher so that you can see what trend your trade is. If you're in a 15-minute chart, for example, you don't know if it's an uptrend or downtrend. We have many trends within larger trends, but overall, you don't know if it's going up or down. So that way we suggest that you use the daily, maybe the 4 hours, sometimes the weekly, to determine a trend. But then you can also use your Bollinger Bands within that as well to make your confidence level even higher. So I hope this helps you guys. Don't forget to like and subscribe. Join our Telegram for free trading tips, and visit our Forex Academy, which is all listed in the description. I hope this was helpful. Love you guys, and we'll see you in the next one.